Hello, my name is Benjamin Z. Miller, and I am the Managing Director of Alamo Mortgage Holdings. Alamo Mortgage Holdings is a United Kingdom company that can pay you a long-term passive income potentially when you make the wise decision to purchase one of our corporate income bonds. We're in the business of purchasing mortgage debt in the United States, and that lets our bondholders earn a significant passive income, hundreds of basis points and hundreds of pounds over what they might earn on UK gilts or other government bonds. I'm going to go through this brief presentation, but first I'm going to read a disclaimer, just part of it. As accredited investors, you will be aware that all investments carry some level of risk. This investment is only available to investors who are able to assess their own appetite for risk. Please read the risk statement within the investment memorandum before investing. Okay, so why U.S. debt? What is the advantage for a UK investor to buy U.S. debt? Well, good question. I'm going to share here the history, an excerpt of the history of the British pound sterling to the U.S. dollar. And what we see in this chart is that ever since the Bretton Woods Agreement at the end of World War II, the British pound sterling has lost value. The general trend has been that the dollar has gotten stronger and the pound has gotten weaker. There's a lot of factors that explain that. But the point is, the trend is if you had £1 sterling back in 1945, it would buy 4 American dollars. If you went to 1967, £1 sterling would only buy $2.40 US. And if you went all the way down to the 1st of January 2023, £1 sterling would only buy $1.21 US. That's a very significant loss in purchasing power. And if you travel around, you may have noticed how it seems like your pounds sometimes are buying less than they used to, especially if you travel to the United States. So what is an investor to do? Because a lot of investors, they think, well, you know, I can get a good rate of return here in the UK. Why would I want to go into another currency? This is something to consider, because an 8% rate of return in the UK is not the same thing as an 8% rate of return in the United States once you adjust for the exchange rate. I mean, it could continue this trend, it could reverse. Nobody can predict the future. I just want you to think about that, because if you have all of your currency in British pound sterling and you don't have any in US dollars, this could be something to think about if it makes sense. But either way, we can sell you the bond in pound sterling or in US dollars. It's your choice. We're very easy to work with. So the way that we are able to pay our return of 8% is we do this by purchasing mortgage debt at a discount. So just to review, the yield on an investment is just the annual cash flow divided by the price you purchase it at. So let's imagine there's a 100,000 mortgage note. We purchase it for 70,000 cash. That mortgage note may be paying 10%. But we purchase it at a steep discount, 70,000 cash. The yield on that note is now 14.2%. So it's quite easy to pay out 8% to investors. What determines the value of a note? This is so important if you're going to purchase mortgage debt. You really need to know what determines the value. There's 6 factors that drive the value. The buyer, that is the credit score of the buyer or the work of the buyer. A buyer with a higher credit score makes the note more desirable. The collateral, how much is the collateral worth? The fact that a note is for $200,000 doesn't mean that it's worth $200,000 if the collateral is only worth $100,000. So you need to know what the collateral is worth. Another thing that's important is the down payment. Did the buyer bring a large down payment, maybe 20%, 30% of the sale price, or did they only bring a small down payment, maybe 1% or 5%? Makes a big impact on the default rate of that note. What about the history of the note? Is it a new note where there is no history? You don't know if the buyer is going to pay, if the borrower is going to pay. Or has the borrower already been making payments on time for 5 years? It's a totally different note in terms of the risk profile. The paperwork is important. What sort of paperwork was done when the transaction was closed? Was it closed properly with a real estate attorney? Was everything done right, or was it just a couple guys that did it on a computer and they found a document online and at a kitchen table they created their own note, likely with many mistakes? So here's an example. This property is a real property, and the asking price on it's $120,000. It's in Texas. Now, this transaction I'm describing is theoretical, but it's a good illustration. Imagine that a buyer came in with a $20,000 down payment and asked the seller to act as his banker to finance the transaction. The debt would be $100,000 after the down payment. Let's imagine they agreed on an interest rate of, say, 10%. In that example, the monthly payments are $877.57. Now imagine that this has occurred for 5 years, where those payments have come in on time like clockwork. This borrower is very reliable. That leaves an unpaid balance on that note of $96,574.32, because the majority of the payments going to interest in the beginning of an amortization schedule. So now the seller, the owner of that note, he wakes up one day and decides that he needs cash. He wants cash. And the first thing he does is he asks his borrower, hey, can you get me paid off with it? Can you go get a mortgage at a bank? And the borrower says, no, the bank still won't give me a mortgage because I have bad credit and because I don't have a work income that's documented. So in that example, what happens is the buyer is not able to replace the financing. So the owner of the note, he starts doing searches on the internet for sell a note for cash. And he finds a company like Alamo Mortgage Holdings. There's thousands and thousands of people and companies that are in this business. And he starts calling them up and he asks them to buy the note for $96,574.32. And they start all doing their game of explaining why they won't pay that much and why they're going to have to buy it at a discount, and they negotiate. Let's imagine that the desired yield is 12%. In that case, the highest a buyer could pay is $83,322.39. So the more it's bought at a discount, the safer and the more attractive it is to the note buyer. And of course, at Alamo, we are looking for very high yields. We're looking for yields even above 12%. So we focus on purchasing packages of mortgage notes. And that's a great thing for you, because when you invest with Alamo Mortgage Holdings, you're not just investing in one mortgage note where something could go wrong. You've got a package of mortgage notes that we are acquiring. You are able to avoid all of the headaches and just get the passive income. So this is, you can see here, this is actually an excerpt of some mortgage notes. This is a real package, and you can see, hey, you know, this mortgage note has a debt of, for example, this one here has a debt of, say, $30,197. That's the current unpaid principal balance. But the original note was for $43,200. So this one has been around for a few years making payments. And this one has a very high rate of interest, 14.25%. So it's something that's relevant, because when we purchase these notes, these packages of notes, that gives us very high profit margins that we can share with our bondholders. It's a fantastic opportunity. So why bonds? This is a question that from time to time I'm asked, but rather than giving my opinion, I'm going to talk about Harry Markowitz, a Nobel Prize winning economist. Harry Markowitz, he actually won the 1990 Nobel Prize for his work on modern portfolio theory. And if any of you have accounts that are at Merrill Lynch or BlackRock, they just love this modern portfolio theory. They just love it. And many of the solutions that they develop for their clients at the foundation, a lot of it is based on this modern portfolio theory. But you know what's interesting about it? Harry Markowitz, the Nobel Prize winner, he didn't even use modern portfolio theory in his own portfolio. So he created this complicated theory, and people love it, and they study it, and they do all these equations. But in reality, what he did was much simpler. He would once a year adjust his portfolio. He'd put half the money in bonds and half the money in stocks. And then once a year, he'd look at his portfolio. If the stocks had gone up a great deal in value, he would sell some stocks and he would buy bonds, or vice versa. If the stocks had gone down in value, he would sell some bonds and buy some stocks. So it's something that you might think about. You might ask yourself the question, what percentage of your portfolio is in bonds? I know everybody wants to put their hand on that cryptocurrency stove and get burned. But, you know, a lot of times these old-fashioned things, they're there for a reason. And those more modern things like the cryptocurrency, they certainly are, they're fun, but they can be a bit risky. Why Texas mortgage debt? Why don't we just buy all over the United States? Well, we like to focus at Alamo Mortgage Holdings so we can do the best job for our bondholders. And by focusing on just one state, by having a team that has extensive knowledge of all the rules and regulations in that state, we have an advantage. We have a competitive advantage compared to those note buyers that say, I'll buy notes anywhere in the world. So this is how it works. We basically people are moving into Texas. People from California and New York are moving into Texas. This makes the value of the real estate higher in Texas. And when that happens, it makes the collateral that backs our mortgage notes rise in value, which is a fantastic thing for our bondholders. So what are some of the key features of the bond? Number one, you can reach your passive income goals more quickly. When you work with Alamo Mortgage Holdings, we develop a custom-tailored annual investment program for you to help you reach what your passive income goal is. You may have a goal of 5,000 pounds a month, 3,000 pounds a month, 10,000 pounds a month, whatever it is you're trying to reach. Give us an idea of how many years you want to be there in, and we can calculate for you exactly how much you need to invest each year to reach that income level. You also benefit from diversification. You're not just investing in one note. That's a smart way to do it. You also don't pay any fees. Oh, I hear all the time these investors brag about their low-cost index fund and how it's a really low cost. Well, folks, that's great that you've got a low-cost index fund, but that doesn't impress me. At Alamo Mortgage Holdings, we don't charge our investors any fees. I think that's even better than a low-cost index fund. So we also offer flexibility on the payments. We can pay to whatever bank you ask us to. About the team, I'm the founder. I've got a lot of experience in business. The other team members that we have, they have worked with clients including Microsoft, Chevron, Exxon, Eventbrite, and Fora Financial. Marina, she's our international investment coordinator. She's so talented. She speaks multiple languages. She's got a Bachelor of Arts degree from the EU Business School. Scott Wynn is our industry expert. He's got 30 plus years experience in the mortgage business, buying notes. He's an expert in taking a note that's not performing and making it into a cash flowing note. Fred Hobbs, he's the director of mortgage servicing. He actually has a company, SecureNet Loan Services, and I highly, highly recommend SecureNet Loan Services. They are the best if you need mortgage note servicing by far. Alamo Mortgage Holdings, we service all of our notes with SecureNet. They do a great job for us, and they always have, and they always perform. They're just the best of the best in the mortgage note servicing industry. We've got David Jones, who's our in-house legal counsel. He's a third-generation lawyer in the state of Texas, and he helps with making sure that everything is correct on the documents and the legal side when we acquire notes. And so, fantastic guy. Mark DeRuyter is our chief technical officer. He's an extremely intelligent guy. Has been involved in actually creating a lot of commercial mortgage software that you may have seen or even used. So he knows a lot about the mortgage business as well. He's also a successful investor. Andrew Richings is the founder of Thomas Kelly Holdings, a boutique private consultancy firm. They are a very experienced firm in the UK, and they've got some of the best relationships. They focus on private equity, fixed income bonds for ultra high net worth investors. And they help us with everything in terms of going over business strategies. What about why should you invest in the notes? Well, if you want a superior income, if you want more income, you should invest in the note. How long-term is the note? We offer 3-year, 5-year, 50-year. Can you put the note into your self-invested personal pension? That's actually up to your provider. I see no reason it wouldn't work well there. What type of an investment? It's a corporate income bond. It's not a government bond. Is it a regulated product? No, and that's part of the reason that we can pay so much more. The expense of regulation, it is just passed on to the investor. So right now we're not regulated. At some point in a few years, we might do that, but for right now, we just prefer to pay the higher rates to our investors, and they kind of understand what they're doing and they like us. Who can invest? Accredited investors, sophisticated investors, high net worth companies, come one, come all. How's the money protected? We can do that on a one-on-one call or Zoom meeting. We have multiple layers of security. Do we allow joint applications? Yes. How's the tax managed? Well, we make it simple. We pay all the money to you. We don't deduct anything for the taxes. Everybody has a different tax situation. And frankly, it's better if we just pay 100% of the interest income to you, and then you can determine how much tax you should pay with your tax professional. Are there any limits on how much I can invest? No, and we can support very large placements, including institutional placements. It's not a problem. We have enough contacts where we can support extremely large placements. We will work with investors. You know, our suggested minimum investment's 100,000 pounds, but if you're just getting started with us and if you're on one of our annual investment programs, we can get you in for even less than that. Can you get access to the money early? No, this is not a product like day trading where, oh, you know, I read something in the newspaper, I better sell it real quick for a loss. You know, that day trading, that moving in and out, they've done studies that majority of those genius day traders, they just lose money. A lot of times it's better to get a real rate of return at a slightly lower rate than gambling on cryptocurrency or day trading. So this is something where if you're understanding that, you will do well. But we plan so that at the end of the bond term, you can get your money out. And we can also renew it for you. If you don't want it out, if you want to just let it keep working, we'll work with you. If you want to get more information, just go to our website, alamomortgageholdings.co.uk, and fill out the contact form. I hope that helps, and I wish you good luck with your investing.